on a regular basis, both fundamental and technical. And, again, definitely if you're not already on there, it's free value. Why not? His link is right here. Click that link, subscribe to Kenzo. And Kenzo, thank you very much for coming on the show today, man.
Thank you very much, and your viewers, man.
All right. We'll see you again next week. All right. With that said, we're going to now shift gears again. But before I do that, I just need to update you guys. I did add slightly to my short on the Russell just a moment ago. I am writing up something. I was trying to not be rude to Kenzo, but I was writing up a little bit of an update on my short here. So let me just finish this. I added slightly to my short on the Russell at current levels. I also trailed my stop to reduce my overall risk. Okay, so let me just make sure that I have this all set. So my stop loss has been moved to 196.05 on IWM. My entry. Now let's take a quick look at the futures version, RTY. Stop loss is at 1977.2. Let me make sure that's good. Yep, good there. Entry is the same. And we're good. Okay, I'm going to just share a screenshot of this as well. And I'm going to add something to this. So let me just... So I added right here. Sell entry. Okay. All right. So stop loss is pretty tight on this now. I've reduced what was a stop loss up here, but yesterday's wick off of that area, I'm just going to take that as my new stop loss point. So again, I still like the story for Russell. I am staying short for now and very willing to stop out if needed. When it comes to shorting indices, I am like the fastest person to bail on the trade because I don't love shorting indices in general, but right now I just like the story for it. I think it's, I also have long positions. So in some ways this is offsetting some of my other bullish positions. So I'm just going to update this for members. This is now in the group. So this was an update to my trade inside of the VIP room. If you're not in the VIP room and you would like to be, you can click the link. We'll drop a link to chat with our team directly on how you can get more information about that. If you would like that, again, chat in the chat right now, click that link. Why is the NASDAQ underperforming so much? Could have been Netflix earnings. Could have been a little bit of a concern there. Also, was there more earnings this morning? I guess we can ask the man himself in just a moment. We've got Chris Pulver joining us again. Should be fun. So real quick, we're just going to take a quick break, set that stream up, and then we will be right back. Be back in like 30 seconds just after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, and we're back with Chris Pulver. Hey, Chris, how's it going? Good to see you again.
What's up, Nick?
I know it feels like it's been forever, even though
I
it
know.
hasn't been that much.
I
But
was gonna text Chandler the same thing. It's like it feels weird that I haven't been on all week.
yeah, how were the Masters?
They were good.
Hey, that's awesome.
That was good, man. It was a great week. I was there. I got in, spent the time with you guys on Monday. Got to the destination Monday, Tuesday to Saturday. Spent the time at the golf course. Got back late Saturday night. Watched it from home on Sunday. I expect a little bit more drama on Sunday for pin placements in the Masters, but Scheffler's #1 for a reason. So he just did his thing, and nobody really caught him. But it's a fun tournament, awesome place to be, and very, very lucky and fortunate I could do that every year.
Yeah, that was just awesome. So glad you enjoyed it, and it's good to have you back on the show. Been a crazy, last week or two here.
Yeah.
I was, just looking at the Nasdaq, you just have this crazy candle here today. Big drop, at like I guess peak to trough here. We've now officially seen, about a 6.6% move on the Nasdaq. I'm sorry, to the S&P 500 here to the downside. Crossed briefly under 5,000. We're back above that. There's so many things you could cite for what came out of nowhere. And it always does, Chris. The bear case always comes out of nowhere. Suddenly, well, I mean, not really out of nowhere, but it's like it was already there, but the market starts paying attention to it. What I'm talking about specifically is yields creeping higher, strong economic data, and finally Powell kind of lets the cat out of the bag and says, we're willing to stay higher for longer to keep fighting against inflation. It's an ongoing fight, and you combine that with geopolitical tensions in the Middle East, and suddenly the markets are in question of how sustainable this rally is. Where are you at with all this? Is this a pullback, or does it have more room?
Well, that's a great question, and here's my take. So typically we have to see all this negative stuff to continue to drive the market lower, correct?
Mm-hmm.
You can't have good news and see the market drop. And this is what's interesting. How many days have we really put most of the fuel into the sell-off? 2. We've had 2 big sell-off days. So if you go to the SPY, we had the big sell-off on Monday this week, which was like a $10 move on the SPY, which is huge, and a 100-point move on the SPX. And then on the 4th, on that Thursday, a crazy move at the backside of that trend line. So I did this yesterday. It was really interesting to see that this candle all by itself was about a 2.06% sell-off. And then Monday, same type of thing, another 2.2%. So of the 5.5%, 6%, over 4.25% of it happened in 2 days. So that's where like all the fuel and the momentum has been. And so we're just kind of leaking lower, drifting lower. But from the technical side, here's what I'm looking at. I'm taking a fib swing from this low from October to the current all-time high. I do think that the market might drip and leak a little bit lower, but we have the NVIDIA gap looking to get filled here at this 23% pullback. I have a Gann retracement level at 30. And then what's an interesting spot is the all-time highs that we had in 2021, 2022, and a 38% fib. To me, technically, yes, we can leak a little bit lower, but that's my bounce. So I'm not saying I'm calling the bottom now, but I wouldn't be surprised if by 480 on the SPY, the market at least puts in a bit of a floor. And maybe that's a dead cat bounce. I'm not sure. I mean, if we talk wave structure for a second, Nick, then maybe we have this. Maybe this is a 1, 2, 3, 4, 5, and we have an ABC correction. Makes sense to me. I mean, so I know there's a lot of stuff fundamentally, geopolitical, Middle East, oil's down, risk off is certainly the tone. Did you see what happened to the Swiss overnight? Swiss franc had a big spike. If you go to a currency strength meter and check this out in real time, like this was about an hour or two that the Swiss just got extremely strong. And then here we are just fading the move for the rest of the day. So, I mean, it's trading. They're liquid markets. We got to pick our battles. But I'm looking at my week thus far. 1, 2, 3, 4, 5, 6, 7, 8 wins, 1 loss, and I actually had 2 more wins this morning. I closed out for TSM profit on an earnings play and Netflix for an earnings play. So as far as trading goes, things are fine.
Hey, Chris.
Chandler, what's up?
Surprise, it's me. Our power went out again. This is the third time. I don't know. The little on the wheel keeps getting tired. I don't know what's going on. But I mean, you've got the show. I know. I figured because
Okay.
Nick obviously got kicked off his, and I'm on my hotspot, so I'm just gonna give you the reins.
Okay.
All right. Is that okay?
Okay.
And then
All right. Well,
you can
I
just
wanted to
go
have that
like you normally
conversation with
would.
Nick. No, I was kidding. Okay.
Yeah.
Okay, that's fine.
I know.
I'll take it.
It's so annoying. It's the third time this week this has happened, but
I'll blame the
yeah.
eclipse from last week. That's got to be the change, right?
I don't
Okay.
know what's going on.
Just run. I'll take the show, and we'll just keep chatting.
Okay. Yeah. Go for it.
All right. Cool, man. Thanks, Chandler. Okay. Gold short term. All right. How about this? Let's throw out some instruments. So I was in mid thought with the technicals here, levels that I'm looking at. So I just got filled on a trade for the NDX. So NDX. NDX. Try it a third time. I got filled on the NDX, and I have a broken wing butterfly with a 16.6 pin price. All that means is this. So for the next week of trading, going in to next Friday's expiration, it's a long put butterfly with a skip strike, and that looks like this. If you're familiar with the way a risk profile looks in an options trade, my risk is down here. My peak profit at 16,600 is right here, and I collected 75 cents. So my credit on the trade is 75 cents. And what has to happen here is, as long as by next week price is above this level, this is going to pay the full 75 cents to me, and I'll keep it. Okay. If price comes down to this level by next week and it gets remotely close on Friday to that level pinned, which is back to these all-time highs, this can be a 10x return on the 75 cents. So if I build this out right now, I will show you in one of my platforms here. This is a fun little way to build out some trades. Let me grab this here and get the legs. So this is an NDX. Let me edit this on the instruments. Let me see if I can find NDX. All right, let's edit the spread. So I'll go out to the 26th. I'm selling the middle for 2 contracts. This is the 26th for all of these. It's a 16,600. On the nose, 16,600 on the sell side. These are puts. And then I did the 16,610 on the upside. 16,610 on the upside and 16,580 on the downside. 16,580 on the downside. So it should look like this. Okay. So it looks a little squirrely right now because I don't know if this is my like theta line where it's time decay. But basically, this is what you can take away from this. You can see this is real price on the instrument, the NDX, and this is the 75 cents credit that I talked about, and I'm keeping this all the way. So as long as price stays where it is, I make 75 cents. If price comes all the way back down here, I still make 75 cents. If price threatens my position, there's a chance that I can make about a 10x return. You can see up here at the top, that's $1,000 on the trade. So I'd be, looking at like 8 or 9x. Now, the probability of that happening is pretty slim, but it can happen. And to me, it's my protection just in case my position is threatened, because the delta wise is like a 10 delta. So I'm using like a 90% probability that I'm getting this thing to finish out of the money and get full credit on it. Okay, so that's the trade. It looks a little bit weird, but if I stretch this out, you can get the kind of risk profile of a broken wing butterfly. All right, anyway, that's that. So let's talk technicals on these instruments. Looking at all-time highs, take a look at the SPX, same type of thing. Previous all-time highs at 4,800. So I do have a pending order on the SPX. I'm trying to sell the 4,810, do a broken wing butterfly for there for 50 cents. The mid is trading right around it. It still hasn't been filled yet, but let me just check these positions. I did have a bunch of, nope, didn't get filled. So SPX, go to symbol here. Okay, so I don't have any SPX. SPY, that's an iron condor. That's in profit today. I do have a lot of expirations that are coming in today. If you look at my account, go to the expiration here. All these 0 DTEs, those are 419 expirations. The IWM is out further, so I'm upside down in that position, but I'm longer term. That's out to January of next year. I'll worry about that drawdown, but everything else, $1,000 on the SPY, $1,000 on the DIA, $2,200 on Bitcoin or BITO, $1,300 on URA, $1,000 on KMB. $437. I mean, you can see it. It's a lot of green, which is good because make some money this week. These are all my days to expiration, so make some money this week on those 0 DTEs. And these are, by the way, these aren't just like, oh, I took these trades today. That'd be insane. No, these trades have been running for like 30 to 45 days, sometimes 30, 45 to 60 days, but they're mostly all in profit. Apple's going to be a loss today because we just can't get the 165. These are going to be fine. The 165s by 160s, the 160 by 155s, those will be fine. I did roll out the 160 by 155. I have one here, the 170 by 165. That's going to be trading for nearly a full loss. So there's not really much to do on that one. I could roll it, but it's already upside down about $4.50. There's really nothing to do outside of just take the loss and no big deal. But, losing $1,000 over the course of, making $10, $15, $20,000, it's not a big deal. So anyway, that's Apple. And I can still look out of the money for additional credit spreads on Apple. Oops. AAPL. And let me field some questions here. Let's see here. New trader trying to use TradingView, open NASDAQ chart, only show New York session. I want the full chart. So what are you trying to trade? You trying to trade NDQ? You trying to trade the NQ? What symbol are you trying to trade? And also TradingView might limit you based on what your membership is too. I'm a Pro Plus, I think, for my profile, or a premium, TradingView premium. I don't know. So it could be limited on data feeds based on your membership. Pound dollar. So dollar index. Let's talk dollar index. Dollar index, to me, I'm still bullish on this overall. We're in the middle of a pre-summer push from March, April, May. Since we've already been pushing higher highs, higher lows, to me, the dollar looks pretty good to continue just to retest this high from 2023 around 107. If we do, in fact, hit this broadening pattern high and come back to this pocket fill, I could see the dollar index holding support around 105.50. Let's say this 105.50 to 105 support and getting up into this 107.50 to 108 zone. And then I'd be looking to take my profit on dollar long. So to me, all I'm seeing on the dollar cross is Aussie dollar pullback, Euro dollar pullback, pound dollar pullback, New Zealand dollar pullback. I'm still looking for the dollar to turn and do this. We break, we pause, we go. If we get another push to the upside on the dollar, then I look for the pound dollar, Aussie dollar, Euro dollar, New Zealand dollar, dollar CAD, dollar Swiss, dollar yen, all favoring dollar strength. That's my outlook there. Okay. Let's go to, I saw Dan is asking for Costco. So Costco at 707, bull put spread, any ideas? So if you did a bull put spread, I like out of the money as opposed to at the money, just because this recent run up is still potentially in corrective mode. Until we see like a broader market bottom, I would say I'm not really doing much at the money outside of silver. Silver I have at the monies. It's a 27 by 26 in SLV. I need price to go about 95 cents by the middle of May, which I think it's capable of doing. Music to my ears. I just got filled. I don't know if you can hear that. It was on my end, but I just got filled on all my positions for the SPX. So SPX is pushing a little bit lower. I got filled with my -2s at 48.10. Should be right here. Let's just use this account. SPX symbol. So my NDX was filled. My SPX, it's a 48.10, 48.15, 47.95 filled for 50 cents. So that's a 48.10 fill for next Friday. 48.10. So -2 at 48.10. So that comes into my wheelhouse. I can build that trade out as well. It's going to look the same thing as that other broken wing butterfly, which is there's my zero line, there's my risk, there's my 50 cents credit. Price is all the way up here. It'd have to drop from current price. We'd have to see just a continuation lower. If we have another, decent sell-off of 3 to 4%, that would be, we'd have to go right around 3.8% for the week in order for me to get threatened on my position. Otherwise, I'll just keep my 50 cents. Okay. Let's go back to Costco. So Costco's trading at 706. Pressure remains to the downside. Looks to me like we're pretty corrective. Levels that I like on Costco, I would say this. 692 looks pretty solid, and the 663. So one thing you can look at right now, if this is me looking at a trade on Costco, is we could set a bull put spread down in this area, and try to put in a credit order that is a little bit more attainable. So if I did it right now, looking at let's say that we trade like a 660 strike. Let's go out like 45 days or something like that on Costco. Okay, so if I go Costco trade, go out 45 days, that puts me out to May 31st. We have earnings, by the way, on May 30th, just to keep that in mind. So if you wanted to take this trade prior to earnings, I would go out to the 35-day expiration and not really worry about the earnings play, because if we have a big move up or down and it jeopardizes your position, then credit spread could be a quick loss. But if you look at it now and take the expiration prior to earnings, so we'd have the 24th expiration on our option play, and then the 30th is going to be the actual expiration. I would rather do that as opposed to going out to the 31st and you have to deal with that 1-day earnings. So go out to the 24th. The level that I said that I like is 692 or this like 660 area. So if we did like a 665, you can see the expected move here is around $32 over the next 35 days. If I did the 665, that puts me at about an 18 delta. There's a bull put spread right there. So it's a $5 spread. I get 70 cents. Now the rule of thumb would be something around 30% of that. So if I did a $5 spread, so a 665 by 660, $5 spread times 30%, you're looking to make $1.50 on that credit spread. So if you wanted to take this trade, or if I wanted to take this trade, 665 by 660, I just put in $1.50 credit and I set it up. So I'm going to do that. I'll take a live trade. So here's this is my little tiny account as I'm waiting for my 8 cats transfers from Schwab. Turns out that my other account's just too active and I need to get rid of some of my expirations, which will probably take me until middle of May, which is fine. That'll be like a 50K account. But anyway, I'll take this trade because I've got the buying power for it. It's only going to tie up about 350 bucks. And I'll take the trade. So a 665 by 660, put in a pending order, good till canceled, for $1.50. And it's not going to fill today because it's only trading about 70 cents. But if I take the trade, review and send, put it into my account down here, and boom. So pending, good till canceled at $1.50. Now what that means is price is going to have to fall, right? Price will continue to fall. Those deltas will increase. And so what is now I think I said 20 delta right now. Yeah, this is an 18 delta. So if price gets closer to my levels, we're probably going to get filled at maybe like a 25 or 30 delta. But if we don't get filled, it's not a huge deal. We're at 40. All right, so we're breaking some lows today. All right. More than likely, the probability today is that we are going to be closing low and finishing low for the week. Now, I just want to go back to the indexes really quickly. I'm going to put on this trade here. So this is a 660. Get out of the interval. 660 by 655 for $1.50 pending. And that's a 5/24 expiration, right? Because earnings are on the 30th, and I don't really want to have this trade running through earnings. Okay, so I do like that trade. And what that does is that lets prices do its thing. Price can come a little bit closer to us and not necessarily threaten our position. But what I like about this trade is if we start to see that the broad markets find their footing, and it's probably not now. I mean, we're breaking lows. We're breaking below 5,000 on the SPX. I've been fortunate that the last 2 days we defended the level, so I collected some income there. But if we go to SPX and we have another, 2 to 3% to the downside, I mean, if we come back to this previous test of all-time highs, test this 382 level, that would be the SPX dropping another 3.5%. We've already dropped about 5% over the course of, this took a while, by the way. So over the course of, let's see, this is 14 bars. So that's almost 3 weeks of trading. It's taken 3 weeks to go 5.25%. So could we go another 3%, 3.5% in a week? Yeah, it's possible. Anything's possible, but that's going to be some heavy pressure to the downside. So my point is, if we find some footing here, this is a 23% level. That's a very shallow retracement level. The 30% GAN is something I see happen quite a bit. We test the 30%, and then the market is trying to retest the high. We might not get all the way to the 38%. If we do, this is where I put my position down here. But what I'm saying is, if we have the broader markets finding some bottoms, we're probably going to see something like Costco find some bottoms as well. So I'm putting that Costco trade right around that 38% pullback level. And I think it's a good fill, but I want to make sure I get filled for the proper, the proper credit. I'm not taking a 70-cent credit. That's ridiculous. But I would take, $1.50 because that's pretty appropriate for, 1/3 of the credit. Daniel says, got the May 17th, 700, 675, 512 credit. Okay, so just again, I want to do the math on that. That's awesome to make $500. You just have some risk on the trade, as you know, right? You've got a $25 spread, 512 collected on it, right? 512 collected on a $25 spread. You're collected about 20% of the width, which okay, fine. But you're monitoring levels, so you've got the 700, and that's a little tight. If you go out to the 17th, and I'll give you an expected move here. So Costco out to the 17th. Okay. It shows right now that current price is here. Okay. And the expected move, one way or the other, about $30, $29, your 700 could be threatened. That's all I'm saying. Because if you're 700 by 675, any additional movement to the downside by the 17th, you've got $20 of risk on that trade. Right. So anyway, there's options. If you wanted to roll it, you can do that as well. But with credit spreads, and you have such a wide spread, all you can really do is roll out in time and do it early enough that maybe you get additional credit for it to lower your risk. So if you got it for 512 and you can roll it for another $1 or $2, it just lowers your risk. But you definitely need to make sure that time is on your side, and you'll have to deal with earnings. But I wouldn't be surprised if Costco's earnings are pretty solid. It usually is. This is our last earnings print, I believe. Right there. We missed in revenue, but EPS was positive. I mean, it was a slight miss, 1.13% in revenue. So, anywho, but yeah, we'll stay in touch on that, Daniel. I took the trade at the 660 by 655, but I don't know. I'll be watching. I'll be fingers crossed for you. Okay, can you check the DJIA? Yes. You want to trade futures on this? Inch up. Yes, this is another one. I'm going to place, let me see if I can, so I did it on the NASDAQ. I'm going to see if I can trade, what do I trade for Dow Jones futures? Let me see this in my Tasty account. So Dow futures, DJIA, see what the price is here. Nope, that's not it. Where are my Dow futures? Not DIA. Let me see all my tickers for the Dow. Got Dow Inc. That's the company. DWCF. I don't think that's it either. Nope. Where's my Dow? That's strange. Dow Jones Industrial Average. None of these are it. Nuts. Well, anyway, yeah, I was looking to see if I could do the same thing. So this is, the Dow trading at 38,000. Two levels I'm watching. Previous test of the all-time highs. Take the fib swing. I mean, this is like me on repeat. I mean, all I'm really looking for are, what are the alignments? Okay. We have previous all-time highs. We have the 30 to 38% fib that's been tested. I could see the Dow catching some bid and outperforming. And again, there's no outperformance in a bear market. It's just which is the lesser of the crappy indexes, right? If they're all dropping, it's not like, oh, which one's better. I mean, the Dow's probably going to have the least drawdown compared to the Nasdaq or the S&P 500. It's a little bit more resilient because you go into kind of these big blue chip companies. But point is look at what price is doing right now on the Dow Jones compared to the others. If we go Dow Jones compared to the SPX is still red. Go to the Nasdaq, still red, right? I mean, we're getting some big reactions here. And I look at this all-time high level, same thing. I mean, I'm just watching my levels, plotting my fibs. So right in here, and I'm looking to see, what keeps me out of trouble. Okay. So if we have, this level getting tested, this has been about a 6% correction, if I'm not mistaken, 6 or 7%, maybe a little bit more volatile. This has down about 8%, but we're spiking back up to current levels. This is around 7% pullback or 7% drawdown. So could we pull back to all-time highs? Sure. But if we're talking double-digit corrections, okay, double-digit corrections, I mean, that's 11%. Could it get there? Yeah, it could get there. And I'll say this, if the pullbacks on the S&P, the Nasdaq, the Dow, if they're contained to single digits, I think this market is resilient enough that we can come back and retest the highs and still make all-time highs. My concern is that if we come back to a double-digit correction, if we get to a 10% level, I think it's going to be much harder for the market to justify that. I think what we do if we hit, 9, 10, 11, 12% corrections, that we end up getting into a range where this market made a rip, this market pulls back, and this market retests the high, and we're going to get stuck in a range. And then there might be nothing happening until the end of the year because we have to deal with election drama. And so all the traders that have been just spoiled by direction might be missing out because we might go into a directionless, end of Q2 into summer trading, and there might be a very boring, 3 or 4 months ahead. Maybe. I don't know. I mean, if I had a crystal ball, I'd share it with everybody, but I don't. So I'm just trying to position accordingly. Gold sell? Really? You going to sell gold right now? I'm more interested in just buying dips. I mean, I'm out of my gold positions because it blew through my target. I am still long on silver. Every time I say that, it makes me think of hush puppies and terrible battered fish. But I am long on silver. Any pullbacks, any dips, I'm looking to stay long. And this is my measure move. So to me, technically, silver is a much more attractive trade than gold. I know Nick was in gold for a long time and just trailing. And I'm not sure if he got stopped out on it. He probably did, maybe on this first spike to the upside as we hit like 24.30. But still, gold is, I'm not selling it, man. I mean, if anything, I would wait for a dip and I would just try to buy some more. But I think gold for the full measure move is 24.70. And to me, silver is a better spot to be. Technically speaking, it's more measurable. I'm not trading all-time highs, guessing where the high is going to be or how high we're going to go. Silver has projected symmetry and moves that I'm still anticipating it gets to. We haven't talked about Bitcoin. I mentioned this earlier in my session. Bitcoin, the halving is coming up tomorrow. Look, the halvings happen X amount of times every roughly 4 years or so. Price is responding pretty nicely for right now. If we have any further pullbacks, I'm still looking to buy the dip between 60K and 50K on Bitcoin. I got filled in a couple positions this week. I took a trade on BITO, which is a ProShares ETF. I got filled at 26.50. It's up a couple bucks already. And IBIT, I added in to some dollar cost averaging the BlackRock ETF around 36. So I've got another pending order at 31.50. So I'm dollar cost averaging some Bitcoin. The next big level for me is, we can either continue to show this consolidation right here. So this level, if it's horizontal, we just come back up to the highs at 75. The next big celebratory move would be a break above 75, and then everyone's going to be cheering on 100K. So we've got to get there first. We got to break there first, but right now it's sideways. The wedge pattern didn't really work out. It's just, I don't think the wedge pattern is really an easy one to trade. So to me, if this is high, low, lower, high, lower, low, this could be just consolidation, and then the market justifies a higher high. After the halving, if it dips a little bit lower, okay, fine. But this low, this high, as long as we're not breaking this structure down here, this is just all correction to me. And I'm looking to see, when the buyers come back in a big way. So I'm still bullish outlook on Bitcoin overall. Dollar index, Dennis, we talked about that, but I'll show it again. Recommend. I'm not recommending anything here, Ron. You know we don't do that. Gold, silver, and NASDAQ. Well, I'll give you what I'm in. How's that? I'm in silver, dude. So, I mean, I'm collecting income on the NASDAQ. I've already taken profit on gold. I'm in silver for the next 10 months. I mean, I'm taking silver trades out to January of next year. So I've been long since 20. I'm holding shares. I'm holding long call options. I'm doing diagonal spreads. So SLV to me is a nice trade. That's what I'm in. I'm in a bigger position there. If I show where I'm at on SLV, you can see right here. That's SPX. Here's SLV. So SLV, I'm up about 18 grand and holding. So ideally, if this hits my profit target, 1, 2, 3, 4, 5, 6, 7. 7. This is going to be roughly my profit. So about $6,100 on 7. So about 43 grand on silver if I hit my profit target by May. So May 17th is my long options for a credit spread. July. If I hit my $30 target on SLV by July, that'll be a $43,000 profit. So not a bad chunk. Not a bad chunk. Should be about 3 to 4% for the portfolio. And I'll take as many of those I can get. If I get 10 of those a year, I'm doing pretty well. Okay. Anton seems to be the expert. NASDAQ on spot per performer, gold major asset, silver rare traded. Okay. You give me the bullet points. I mean, look, you trade what you want. I know it is, but silver to me technically has, look, lower liquidity is not a bad thing if there's an absent seller, right? If there's no sellers and this is just a low volume buy environment, that's how gold made the run and breakout that it did, right? Nobody was participating in gold at the all-time highs until it broke out, and then all of a sudden it became all the rage, and then it got dumped into, and it escalated even further. So, silver's just getting started here above that $26 breakout. So anyway, that's my 2 cents. So anything else? I've got some trades running. No, I get it, man. I'm just having fun. So look, I am everyone's biggest fan and biggest supporter. I mean, I've been trading for, I've been in the markets for over 20 years. I've been actively trading for 15 years, full-time trading for 15 years. And, I trade equities, I trade options, I trade crypto, I trade Forex, and I've done it for a long time. So I'm just looking for a way to make money, just like everybody else. So there's times where, yes, I'll be fundamentally aware. We'll talk about, we'll opine on what we think is going to happen, but at the end of the day, we don't have crystal balls. I trade probabilities. I trade historical significance. History doesn't repeat, but it often rhymes. That happens all the time in the markets. You can learn a lot from what the market's done in the past, but it's been through world wars. It's been through crises. It's been through inflation. It's been through deflation. It's been through all sorts of stuff. And is it different? Probably, right? Because we have different mechanisms in place. We have different tools in place. We have different, backstops in place. But at the end of the day, we're still just trading. There's plenty of opportunity in all the assets I mentioned to make some money. And that's all I'm trying to do. So what I do is take a trade, do my best, move on. Take a trade, do my best, move on. You're never going to see me say, this is my entire portfolio. I'm putting it all in line because of this trade. That's insane, right? I've been around for way too long to have one trade be my, my magnum opus and the reason that I live or die, and it's just not worth it. So I just trade. If I take 100 trades and I could win 60, 70, 80 of them, awesome. I expect to win. When I lose, I take it on the chin. I move on. No one trade win, no one trade loss. They don't define you as a trader. So, keep the emotions out of it. Stick to the process. I've said that for years. Process equals profits. It's really important. Okay. All right. So that'll wrap it up for my little sesh today. I'm going to jump into a webinar here at 11 o'clock. I've got some other classes to attend to. But as it's been posted, you can follow me on YouTube. My channel's youtube.com/Chris Pulver Trading. And I've got a Discord channel if you'd like to join that as well. I think the team shares that, but I'll throw it in there for a link that doesn't expire. Let me throw it in here right now. So this will be edit link. All right. So this is my Discord group if you'd like to join. Join my free Discord group. Put that in the chat for everybody. They are out of the money on silver. They are bad. So what I end up doing is I do long options. So I'm doing a diagonal spread where I'm long at 20 and I'm selling at 30. And then once that 30 expires, if it's like 75 to 80% decay and I'm collecting most of the profit, I'm better off just going out further in time and collecting more premium. But I either own SLV or I'm doing a diagonal spread. So yes, you're right. Like out of the money's not that great. At the money's are fine. I collected 60 cents on the 27 by 26 this week, and I'm going out to May. So I'm doing like a 30 to 40 day cycle. If price continues to go for the next month and a half, then I'll make 60 cents on that per trade. All right. So plenty of trades out there to dissect, and I'm happy to share it with everybody. And this is what we do. All right. So happy Friday, everybody. Nice to be back. Nick and the team, Chandler, nice to be back. It did felt weird. I know I only had a couple minutes with Nick, but it was funny, like all week, just like, yeah, I'm used to doing like 2-3 sessions a week with you guys. So anyway, we'll be back. And that's it. Happy trading, lots of profits. Have a great weekend, and see you next week. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.